Hello everyone, and welcome to your on-chain video update for the 21st of November. So today what we're going to look at is kind of revisiting something we touched on in a couple of videos before, and this was this concept of short-term holders, or essentially people who are recently accumulated their coins, being the dominant movement of price action at the moment. So most of the coins that we're seeing flowing around are kind of the same liquid supply. They're the same coins moving around between sometimes the same investors, and it very much looks like swing traders are in the mix at the moment. So we were looking at things like liveliness and realized cap, and we will come back and revisit that just to kind of set the stage. But really what I want to look at is kind of this cohort of short-term holders, which I think are kind of more important in the current market environment, and will really set the stage as to why I think that is. So what we're going to do is look at identifying why short-term holders are probably having a larger impact at the moment, and that's fine. It's just we're looking at different cohorts. And I guess this is the power of on-chain analytics, is that we can essentially see within the, there's kind of three classifications of coins. Long-term holders, which are those coins which are outside of exchanges, have been dormant for 5-6 months, generally people who are, the smart money. Short-term holders, which is increasingly going to be swing traders, it's going to be people who are brand new to the market. They're essentially coins that, irrespective of who holds them, they're more likely to be spent again. And then there's a whole other class of coins which are on exchange. And naturally, they're going to always be some form of supply. Some of them are going to be held by long-term holders who just happen to have their coins on an exchange. Some of them will be short-term holders. We can't classify them. All we know is that they're on an exchange, and therefore we just consider them to be liquid because they can be sold and bought with a click of a button. So they're the kind of classifications we're looking at. We'll do a short-term holder deep dive really in this. We'll look at things like the profitability of them. We'll look at short-term holders SOPR and their spending patterns. And then we'll jump in and look at our momentum oscillators and just see where they're kind of at over the last couple of days, which we touched on Thursday's report. So let's jump into Glassnode. We'll run through a kind of a market overview, and then I'm going to zoom in and double click on what's going on with the short-term holder cohort. So the first thing that I want to touch on is actually this URPD metric, which I find to be, it's one of the more powerful metrics that we have in the suite. What it's mapping out is the UTXO set. It's looking at all of the coins in Bitcoin's supply. When was the price when it last moved? We'll just wait for this thing to load up. Now, what I really want to highlight here is that this is what I would classify as top heavy. So we do have a lot of coins that have moved. I read, I think Permal Nino did some work that I read earlier. This is roughly around 15% of the total supply that's currently sitting up above our price level where we are at the moment. So we've got 15% of the supply sitting above us, which is reasonably top heavy. And you can see we do have some coins below us, but there is a gap all the way down into the 50,000. So, this has somewhat of a feeling. And again, I still remain in the bull camp. I don't believe that we're in some kind of prolonged bear market. I do believe that this is probably a dip worth buying, but I also think that the risk is always going to remain there. And let's keep an open mind and just consider really what we're trying to look at here is what is the probability, who are the spending, what are things we can keep track of to kind of pay attention to this. So what I'm seeing here is it looks somewhat top heavy. You can see that a lot of coins here have thinned out. And in fact, we could probably even just jump back. Let's look at, let's just say start of October, right? We're going to watch how this changes through to the 1st of October. Here we go. You can see the magnitude of coin supply that's sitting up here between, this is 30,000 all the way up to 48,000, right? If we now step forward, let's just go by 2-week increments, see how this started to fall down and we saw coins move up into this top zone. Now, bear in mind, most of the coin holders who purchased during this particular market cycle bought in the May through to July period. Then again in September, that's where most of these coins were bought. And now they're being essentially sold to people as we push up to new all-time highs. You can see prices up an all-time high, a large cluster here, a lot of it which came from over here. Let's go forward another 2 weeks to the 29th of October. Okay, this guy here has shot. This is very interesting. Why is this shot? I think this is because the buckets have been reclassified as we move forward. Let's just see. Let's go back to 15 and then look at 22. So you can start seeing that these blocks are breaking down. We're seeing fewer and fewer coins in this particular zone, more of them being added up in these top zones, right? Let's go to the 5th of November. You can see that this is really starting to bolster up, right? We're getting, over the course of November, we've seen, here's a whole bunch of coins that got sold at the top. We're seeing this zone continue to fill out. Note how we've got less down here. This is now getting top heavy. And then we push to the 19th, really starting to fill out. And then we get to our current era. So what we're seeing is that coins are being moved from these lower price bands. Note how this has thinned out substantially up to this zone. Now, this has a lot of feelings like we were last time we were at the all-time high. We had more or less the exact same thing. We broke above $1 trillion. We played up here for a while. We traded down to the bottom end of that range. We pulled up again, and then we traded down. We had our May sell-off. Now, I don't think that we're going to have a May sell-off. I think that's too obvious for the market. A lot of people are going, oh, no, it's May sell-off. I feel like that's a lower, to me, it's a lower probability outcome. I do think there's more volume flowing in, but at the same time, Bitcoin can be selling off because it's a bellwether, right? Sometimes Bitcoin moves before the rest of the market. So it is just something to pay attention to. There is that downside risk that exists. I don't believe that that's where we're going, but I think that that's something just to be aware of. And we can see there's a lot of coins up here who are in a large part underwater at the moment. This is kind of the thing that we're looking for. We're looking for, when do these parties start to capitulate? Now, what I really do want to see, I actually want to see these folks get scared who bought the top and go, oh man, I don't want to go down to March again. I don't want to go down to that May sell-off again. That's too scary. No way. I'm going to sell out at a 10% loss and that's it. I'm out. I'm done. That's what I want to see. I want to see these top buyers capitulate sooner rather than later. As soon as they capitulate, the higher probability is that we continue to bounce. So that's really the framework that I want you to think about as we carry on through this session. Just a very high level note, Grayscale starting to tick up. I'm paying attention to this. This is something I want to see. Purpose ETF ticking up a little bit. Derivatives, this is constructive. Look how funding has completely declined. Excellent to see. Open interest is still higher, but not too bad, right? Alongside declining open interest, funding rate, sorry. Excellent to see. Volume is higher. Overall, I don't think the probability of a leverage flush out is high. More options being traded. So far, so good. Exchange balances still looks good, right? We've still got outflows overall. Outflows, exchange balances continue to break to new lows. Overall, very, very hard for me to be bearish on this particular metric. On-chain activity, non-zero balances are now pushing up towards an all-time high. That's great to see. You can see we're still in this grinding pattern for active addresses, right? Transfer volume, again, I don't want to pay too much attention to this. I'm not sure what this all-time high is. This is an NT adjuster. I'm not sure until we've fixed up at Glassnode the FTX heuristics. I just want to see that fixed before we focus too much on transaction volumes. Declining volume of older coins, normally a good sign, right? Starting to just point to that conviction returning. Old hands don't want to sell at 50,000. They want to hang on to their coins, right? I'm not seeing old hands. Actually, I don't think long-term holders are really playing a significant role in this at all. So here's where we're going to start getting into the short and the long-term side of things. So this slide here is really, really important, right? This is going to help us set the scene. Then we're going to jump across the hodl waves and explore that in more detail. Note that we have our net realized profit and loss in the red. This is excellent to see. This means that on the whole, people are realizing net losses. Realized profit breaking down significantly. So this net realized loss is a combination of two things. Fewer profitable coins. We're down around $1 billion a day, a bit below that. At the same time as we have an uptick in realized losses. Excellent. Who could possibly own coins higher than the current price? Only short-term holders who bought the top. I want to see this rip higher whilst price kind of technically corrects. I obviously don't want a May sell-off style thing. That's no good. That's what we saw back here, right? Huge capitulation event. And again, even if we did have that capitulation event, we had a rally from 29,000 to 69,000 over 3 months, right? All the bears in the room, how'd that make you feel, right? When we get a flush out of people, that's what creates the impetus for us actually to move higher. We need it. We need the market to flush out all the weak hands who bought the top because they are the persistent sell pressure that essentially stops that from happening. So overall, this trend is excellent. Net losses, profits going down, which means profitable coins are staying dormant in a big way, mind you. This is non-trivial. This is a big drop from where we were. Profitable coins have stopped being spent. And again, I'm an engineer. I look at rate of change. I want to see big changes in these directions. These to me look like very large changes in the correct direction. SOPA, as a response, you can see SOPA maps onto net realized profit and loss quite well, has broken down. We've got a retest of one. I wouldn't be opposed to another retest, just pull back and really test everybody's conviction. Short-term holders are now realizing losses. Looks like these dips, right, generally a pretty good sign. So we do have a good setting for what's going on at the moment. We talked about how about 15% of the supply is currently underwater. Kind of gives you a magnitude of just how top heavy we really are. And I think that remains the number one risk is that top heaviness of where we're currently sitting. Lifespan metrics, here we are. ASOL, dormancy, ASOL entity adjusted, dormancy entity adjusted, coin days destroyed, and binary. All of these in the recent weeks breaking down. Great to see. Old hands staying put. This is why I actually believe that old hands do not care. They're going to be buying this dip, right? Now, I don't know where the dip's going to go to. We very well could have some more downside, but long-term holders are not exiting. So what we're trying to build up is a framework. Are we in a bull or in a bear? That's, I think, the most important questions we have these big sell-offs. Old hands, people with long-term holder conviction, aren't going anywhere. They are actually an almost irrelevant part of this market. They're going to be part of the demand, but they're not selling. That's the key thing to take away. Long-term holders are not selling at this point in time. That's information packet one. So then we can start to isolate short-term holders as the number one category of people to pay attention to. And let's just, let's zoom in, double click on long-term holders. I mean, it's trading sideways. This is their total supply. It's trading sideways, slight uptick in short-term holders. But again, look at the scale of this compared to this. We're just not seeing short-term holder supply can only go up when coins are withdrawn from an exchange, right, which is good, or long-term holders sell, right? And we're just not seeing either of those two things. We see that coins are coming out of exchanges, but long-term holders are really barely cashing out. So that's why I'm really starting to zone in and clarify that short-term holders appear to be the dominant priority. And same here with liveliness. We're just not seeing the lifespan being destroyed alongside repricing of the realized price. So that's kind of the core thesis. Let's leave all that. So let's dive in. We're starting to look at things like, why are we focusing on short-term holders as our number one category of investors that we're interested in? So here we have our HODL waves. Now remember that this is a proportion of supply of the total circulating supply in BTC. So in this instance, just for argument's sake, here's Satoshi's coins plus all the early miners who never spent. You can see that these 10-year plus coins represent a large percentage, right? 12% of the total coin supply. Economically, they're relatively meaningless because they have zero price. But in terms of the total coin supply, they represent a large amount. So HODL Waves looks at the proportion of coins in BTC terms. We are pretty much barely upticking from all-time lows. Where do we have all-time lows? Well, back here was the very end of the 2015 bear. Back here was the start of the 2016 bull. Here was the very late stage of the 2018 bear, just before we get the final capitulation, which we then had the capitulation event. So, I mean, if you bought anywhere back here, you're laughing. In 2019, just before March 2020, and then following March 2020. All of those situations are late stage bear, early stage bull, great time to be getting involved, right? That's what we're looking for. The amount of short-term coins are at an absolute minima, which means by default, that means that old coins are at an absolute maxima. Now we have to be careful here when we're looking at HODL waves, because as I just said, we've got Satoshi's coins baked in there. Naturally, that's taking up 12% of the space. It's going to push down. This is always going to, you can actually see overall, the macro trend of this is actually to the downside as more coins get lost and just will never move again, right? So all-time low is excellent on the coin supply. That's a good thing. But, we're talking about 15%, 17% of the supply. But remember that price thing does make a difference. So now we're going to do that same analysis, but we're going to look at the realized cap HODL waves. So how do these differ from our HODL waves? So where the HODL waves are looking at coin supply on a BTC basis, what proportion of the circulating supply is X in each age band? Realized cap is looking at the realized cap HODL waves does the same, but instead of circulating supply, it looks at what's the dollar value of that particular subset of the market. So I'm just going to turn on our 10-year, 7-year, 5-year, 7-year. Where are they? They're nowhere. They don't exist. They're these tiny little slivers. Why? Because you have 1 million Satoshi coins at zero price. You have 5 million coins that are at 5-cent price. It's just such an irrelevant number. It's so small in dollar value. So the way to think about the realized cap HODL waves, it's the dollar equivalent. How much of the coin supply is mapped out in how much value is stored in the Bitcoin. So as you can see here, we're not at all-time lows. So this is starting to describe that top heaviness that we just described. There's been a lot of coins that got revalued from a lower level up to a higher level. So they're now sitting in this top heavy type category. There's a whole lot and they're worth a lot, right? Because sure, someone may have bought them at 10,000, sold them at 60,000, but now the person who stepped in had to pony up with the $60,000 times coin volume. They had to pony up with all that capital to buy the coins. So they've invested a larger amount of capital to keep the coins, to buy the coin supply up at that level. So this is the kind of thing that we pay attention to. There's a lot of dollars up in this high level. We are not at all-time lows on a dollar basis. We're actually not dissimilar to 2019. So one could argue maybe that there is a potential here that we're going to have some kind of lengthier time. But it is certainly possible. We also had the same type of level here in 2016. We had a similar level back here in 2013. So we're kind of at that level where we're in between these market cycles. It really could go either direction, but it does show you that we have an uptick in the amount of dollar value that's currently stored in recently moved coins. We have a large cohort of top buyers. As a result of all of this is why I think that we should focus on our short-term holders. We've kind of narrowed out that the long-term holders are unfazed. They're probably going to be buying. They'll soak up the coins eventually. I have no concerns about that. We're not seeing them going, oh, that's it, 60,000 too expensive, I'm out. We're actually seeing that they will soak up the coins. So macro, medium term, I'm not concerned. Long-term holders will get there. If we get some kind of correction, to me, this whole process, as low as we go and as long as it takes, feels like an opportunity to me. So let's now kind of transition to the short-term holders. We care about what's going to go on in the immediate term. What's going to go on in the next couple of weeks? Are we going to have further sell-off? And again, no one knows, but we're trying to establish probabilities behind these things. So I'm looking at something like our short-term holder net unrealized profit and loss. So metrics like this is basically mapping out whereabouts relative to the short-term holder realized cap or their cost basis, whereabouts is the current market cycle, right? Where are they in a whole lot of profit, which will be these green zones? When short-term holders are in too much profit, good time for a top. Conversely, as we saw back here in May through to July, as we saw in March 2020, massive capitulations where all the short-term holders are just puking out their assets. They're absolutely underwater. Every coin they've bought is at a massive loss. That is what you look for with a market bottom. You can also see that this can sustain for some period in a bear. So what we're really looking for is the fractals. When is the pain threshold, right? If we get up here to 0.25, note how 0.25, this legend does give me the grief sometime. We are finding ways to turn off this legend, so just bear with us on that. But note how 0.25, right, this transition between orange and yellow. Every time we pull up and we hit this 0.25 level, note how it forms some kind of a resistance on this metric, right? It's not perfect, but it forms resistance through that bull market. We had the same here in 2019. We kind of broke up to this level. We tested it a few times, right? We've tested it recently. What is it about 0.25? 0.25 means that short-term holders, who are generally the people keeping the coin supply liquid and always spending, they get to 25% overall market profit. So they're taking profits. They're literally taking profits. It creates these local highs. Short-term holders set these local highs. Long-term holders have this kind of perpetual distribution effect where they just continue to drip feed out coins. Short-term holders take them and they get cycled around. They can become part of the mix. But what we're seeing is that as you move into the late stage of the bull, we can sustain higher profits because the market's just getting euphoric, right? Until we finally get the blow off top. So right now, it actually makes a lot of sense that we've had this pullback because short-term holders reached the kind of psychological level where they want to take profit. Now, what happens after you get to those peaks? Almost every single one comes down and tests a value of 0 or undercuts it, gets a little bit below. What does that mean? Means that the overall short-term holder, the price came down and touched the short-term holder on-chain cost basis, the realized cap for short-term holders. That's essentially what we're seeing here. We're seeing they get to 25% profit, they put in a local top, and we pull back and generally come back and test this kind of 0 level, somewhere where we're actually going to get, essentially it's touching their cost basis. That's the point when the market steps in and actually bids the thing. So we will come and look at what the on-chain cost basis is for short-term holders in a second. So very similar concept. Here we're looking at the short-term holder SOPA. This is basically, it will trend higher when they're taking profits. It will trend lower when they're taking fewer profits and undercut 0 when they're at a loss. So as you can see here, we actually had a spike in short-term holder SOPA pretty much at the all-time high. So short-term holders cashed out big. They realized large profits. Now they're currently realizing losses. Generally a good point for a bounce. We've actually got a bounce over the last day and a half. Now, maybe we actually need to get some further downside, let's go to our run up, right? You can see here that we actually had this kind of bounce here, pull up, and then we had a second undercut, right? 1, 2 undercuts, and this kind of fits in. If any of you do Elliott wave theory, this would be your A-B correction, all that kind of stuff. Humans and markets are incredibly fractal. It's why a lot of these models and things tend to work. But you can see that we can generally pull down below this level and then you get a more reasonable bounce. Obviously, this one led into a bigger sell-off. Let's hope we don't go there. But this is generally a good point for a bounce when you've got short-term holders realizing losses. It matches with our realized profit, realized loss metrics we looked at earlier. So it does make sense. They've realized a couple of losses. I do have a feeling that they need to flush out a little bit more. I think we need to flush out a few more of these short-term holders. We're still a little bit top heavy. I wouldn't be surprised if we get some further downside. Short-term holder MVRV is actually very similar to our Nupal metric. You can see that we generally, this is the value of 1, which means it's at the short-term holder realized cap, which we'll jump to next and start to close on. And you can see that we can generally find support as it bounces along there in bulls. When we break below at the start of the bear, it then becomes resistance, right? Resistance, 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 break above, bit of support. 2019 was a funny year, but you can still see that we came down and tested this cost basis. So as our very, very first port of call, what we should be looking for is what is the short-term holder cost basis? That is our key question to ask right now. Now, for those of you with a Glassnode subscription, I am slowly building out, or the team is building out these charts on the side here, these presets. Where is my on-chain cost basis? So this particular metric, short-term holder realized price is what we're looking at. That would give us a short-term holder MVRV equal to 1 and a short-term holder Nupal of 0, right? They're calculated slightly different, but anyway, that's the core point. So let's zoom right into our current market. And you can see our short-term holder cost basis tends to follow price, right? This is when they're realizing losses. This is when they're realizing profits. Nice little retest, right? Let's look at this on the MVRV. Nice little retest. Beautiful little, it comes back, touches that level, right? Bit of an undercut, bounce. SOPA would have done exactly the same. September, little undercut, bounce, right? So all these metrics are telling a similar story. Obviously, they're all derived from similar characteristics, but you're kind of seeing the confluence between all these things. So where is our current level? Current level is at 52,800, right? There's a lot of people calling for 53,000. You know, my view, that to me feels like a very, very high conviction level that should be respected. If we're in a bull market, that should be respected. And when I look at this on an MVRV basis, let's go back to 2017. Go back even further. Man, it's been a long time since 2017, hasn't it? Look how beautifully it respected this level time and time and time and time again. If we're in a bull, 53,000 should hold. It's a key level to watch. For those of you who do believe we're going to head lower, that's probably something to just keep in mind. You can also then look and check and chain for various, Mayer multiples and things looking for confluence. But the last thing I want to close on is our 14-day, basically our oscillator checks, right? These are these fun models that tend to give us the momentum of the market. So what do we currently have? Well, I don't think anyone's going to be too surprised by this. We spoke about this the other day in our daily report. We've basically got a downswing, right? And this is on the order of about a week, 2 weeks. We now have a bit more momentum to the downside. So, we're basically in a correction, and we're kind of waiting for this guy to turn around in particular, right? The 14-day will again be the most responsive. We do need to see a bit of a bounce up higher before it will tell us, give us that signal. Can be a little bit lagging. You can see that in these corrections, it can lag a little bit, right? So you don't pick up the absolute bottom. But this is where you can use things like your 53,000 level, and with the expectation that this will turn around, you can start, adding a little bit at the bottom, and then potentially looking at once it turns green, then you can have confirmation and move higher. On the 28-day, now this is actually one that I think is quite interesting. So we've obviously got our down leg, right? And again, we have very similar characteristics, but the 28-day here caught most of this particular rally, right? It corrected a little bit earlier, but note how we don't have the same downside, right? If we look at our 14-day, we've got increasing momentum to the downside on a small scale. On the 28-day, it's kind of equivalent, right? On the 28-day, we kind of have this, it feels the same energy, for want of a better term. We have the same energy as this correction after higher upside, right? So we have higher upside momentum and relatively equal downside momentum. It kind of looks a little bit like 2017, right? Where we had similar downside, but we had more upside, right? We've got more upside momentum. This is the thing that really matters here. As you get into the later stage of the bull, let me pull this guy up here and this guy here. So when you're in this early phase of the kind of pre-bull up around previous all-time highs, your lows, right, tend to be roughly similar magnitude, and you're getting this gradual upticking of your momentum to the upside, right? You can actually see it in the purple in the background, which is our realized gradient. You're getting this growing momentum, more capital inflow each time, and you can see that the floor prices are actually relatively similar. It's not getting too much more dramatic until the final sell-off into the bear. So we've got upside momentum and relatively equal lows, right? So there's less momentum to the downside than there is to the upside. Very, very similar energy to what we currently have, right? We've got more momentum to the upside and relatively equal lows to the downside on a 28-day basis. So again, I think that's trying to enforce our more bullish bias at the moment. And then the big guy is pretty much just oscillating up here, right? We'll probably get some kind of, if we do get further downside, we can still get a, you can see that this remains green for pretty much the entire rally. You can get serious downtrends here, but the upside just continues. So this is really our big boy macro metric. At the moment, we have an upswing. There's no real reason at the moment to think anything other than that. Now, some would say, is this a big bearish divergence? I mean, maybe. Obviously, we don't have that many data points in all of these previous histories. We've essentially had uptrends overall. You could say that this was a bearish divergence, which did lead into March 2020. But, you know, at the grand scheme of things, I think over this particular scale, right, we're talking about a very, very long term here. My view is that if this can break into an uptrend, then that kind of invalidates the thesis. So I'm less weighing on something like that. But anyway, that's kind of my general view. I think short-term holds are where we're paying attention. We can see that we have a top-heavy market. Really, this is our risk, right? This starting to sell and capitulate. The sooner we get that capitulation behavior, the better. So pay attention to things like SOPA. Pay attention to things like, you know, these MVRV metrics, our Nupal metrics. These are things that we want to see. We want to see short-term holders flush out of their position, and then we can start to push higher. The sooner that happens, the better off we will be. I'm not concerned with long-term holders at all, to be honest. This is really a short-term holder game, and to me, that tells me even over the medium term, right, 3 to 6 months, I'm fairly unconcerned about that. It's the immediate term. Yes, we may get some further downside if these players flush out. Medium term, at the moment, nothing is giving me any red flags. So hopefully that was useful, and I will see you in the midweek report. Cheers.